Well, thanks, David. First, George, I've never heard of you. Who are you? You have no position in Open Door. Are you a technology investor? I honestly do not know who you are and why you should even be given a platform on this spaces to opine about your, you know, uninformed views of Open Door.
George, you go ahead and give him your background.
Yeah, I'm going to refrain from personal insults. So
Well, you said you
no, no,
hadn't
no,
heard of
no. When
me,
you no, when
George.
you say uninformed, that's you may disagree with me. That's fine. I respect that. But
Well, you just rattled off a bunch of statistics and you attributed them to me, and they're incorrect. You said my numbers were based off of Uber, didn't you?
you were the one who
Where
you were. Hold
where
on.
can you show me any published tweet or blog post or anything
I
where
will.
I
I
have
will.
ever made a numeric
Yeah,
comparison between
I
Open Door
will.
and
I
Uber?
will. Once I'm off this space, I will. And right now, I don't have it in front of me. Um,
No, you
uh,
don't have it in front of
yeah.
you.
Okay. But when
You're not
you
going to
but
find it,
so
George. George,
no,
you're not
don't
going to
no
find it
no
because I
no
never
don't
made
no
a
don't you
comparison.
dare talk over me. Don't you dare talk
I
over
will
me.
talk over you, George, because you just rattle off a bunch of claptrap,
Oh, so okay,
uninformed, bogus garbage.
so now it's claptrap
What are you having the SEC investigate me for, George?
to make sure that there isn't a pay.
To see what?
Okay,
What
are you so
specifically did you complain to the
so
SEC
Eric?
about?
Okay. So Eric, if you want to ask a question, do you want to let me answer? Or are you just going to talk over me?
I'll talk over you when I want.
Well, I don't engage with people who talk over people.
Okay, then get off the spaces,
Who are you to
George.
tell me to get off the space?
I don't know who you
I
are.
only ran the
I
number
have
one.
no idea.
You might
Why should
want to do
anyone
it.
care what some non-technology investor thinks? With a bunch of like crazy value-based oriented
So
numbers that
Eric,
mean nothing for these technology stocks like Open Door.
Eric, why don't you spitball a napkin some math to show me how you can justify the valuation?
Did you read my tweet,
I've read
George?
everything.
Which started on July
Oh,
14th at 2
yeah,
p.m. Did you read that
yes,
thread?
I did, and the numbers don't make it.
Did you ever see a reference to Uber in that
The
thread,
number,
George?
Eric, you're changing the question. I asked you a simple question.
Which company did I reference, George, in that
Eric,
tweet
I
thread?
asked you a question. You keep
You
changing.
can't answer because you don't know.
No, Eric. You want me to comp it against all the real estate companies? I'm happy to do that too.
No, I just asked you a question.
No, Eric. Every time I
What
ask you,
company did I compare Open Door to
Eric, I
on
don't
my
have your
July
tweet in
14th?
front of me. And I don't
Oh,
need
you don't
to.
have my tweet in front of you, George. You just thought you'd get on a Spaces and talk a bunch of nonsense about Open Door and me, and
So,
claim that you're having the SEC investigate me
so,
for
so,
what you won't say.
so, Eric, you know, you've asked and said so many things. You don't allow me a chance.
Can you answer any of
Oh,
those
yes,
questions,
I
George?
could. Yeah,
I'm
and if you,
waiting. I will
yeah,
wait
yeah.
and let you answer any of my specific
Okay,
questions.
my specific question, in the order that I can remember.
My
Yeah,
specific
fine,
questions.
fine.
You don't have any questions because you have no informed uh, opinion about this company.
Yeah, it's really interesting the replay.
Is Keith Raboy an idiot? Is Kaz
That's
idiot,
not what
George?
we're discussing right now. I never said that. That's not what we're
Why
discussing.
why do you think the guy who was number two in line to take over and run a $200 billion company in Shopify, George, would quit that job and
Eric,
take the CEO job of a $3 billion company
Eric.
in San Francisco?
Okay,
Why would he do
okay.
that? If there was no plan to make money, if there was no future, that guy must have been the biggest idiot in the world to quit that job.
Eric, show me
He
some.
was
No,
next in line to run a
no.
$200 billion company,
Eric,
George.
if
Why
you're
would
gonna
he do
keep
that?
asking questions and talk over
Why
me,
would he do that, George?
Eric, before I
Can you
can
answer
answer one
that
question, you go on
question?
with 10 more questions. That's the way you roll, right?
Yeah. You haven't answered
Because you
any
don't
of my
let me.
10 questions,
If you would be
George.
quiet for 1 minute, I'd start to answer them. Can you do
Okay,
that?
let's go.
Are
1
you
through 10
capable?
right now. Let's go,
Are you?
George.
Yeah. Okay. Fine. Be quiet for 60 seconds. So who am I?
Answer a
So
question.
who am I? Okay. I've been in the business for 44 years. I grew up at Fidelity. I've had a couple of hedge funds.
So you're a value investor.
Who says I'm a value investor?
Are you a technology investor,
Eric,
George?
you couldn't even.
Have you ever made money investing in technology stocks,
Eric,
George?
you
I'm
said
sorry.
you'd be
I'm on to
quiet.
question 12, George. You got to move
No,
faster.
Eric, you couldn't even stay quiet
Answer
for
my
20 seconds.
questions.
You said you'd give me a minute. You couldn't even stay quiet for 20 seconds.
You just wasted 5.
Um, Among other things, I grew up at Fidelity. I worked for Peter Lynch. I manage the number one mutual fund in the country. I've made my shares of mistakes as well as successes. I think I've been in the business long enough to have an opinion.
Have you
Okay.
ever made money on a technology stock? If
Again,
so, which one?
David, I'm sorry. He can't even keep quiet for 60 seconds. He just wants to badger and interrupt. I can't interact. I'm not going to talk to somebody like this.
Oh,
Forget
okay.
it.
Oh, but I was hiding
No,
from your spaces, George. But now you want to get off this
no.
spaces when I'm here.
You were welcome to come in this space. You chose not
I was
to.
hiding from your
Well, you could
spaces.
have spoke. You could have
Maybe I
spoken
could give a
up.
damn what you
You,
think, George.
if you don't give a damn, then why are you here?
Someone asked me to join.
Fine. So,
He said
but
this guy
just
George
because
is,
someone,
he's
just because someone,
spouting off again.
just because someone
He's
asked you
saying
to join.
nonsense about Open Door.
So David,
I don't. Yeah, I'm here. I'm here,
David.
George.
Yeah,
Let's
David. So
answer the
show me,
questions.
David. Show
Wait,
me the
I'm
numbers.
sorry.
Show me
You
the
have never
numbers.
made money investing in a technology
Show
stock.
me,
Is that what you're saying by your silence?
Eric. What you've made money or I've made money in or not made money is irrelevant to this discussion. It's that's a
Uh,
logical debate.
oh,
No,
oh,
no.
okay.
Eric. Show
A
me the
skin in the game
numbers.
doesn't matter,
Eric,
right?
please explain to
Informed
me.
opinion doesn't matter.
No,
Okay,
I,
George.
I see.
44 years in the business taught you that?
No, Eric. Show. You know what? Instead of deflecting, do everything except talk numbers. Please explain for the audience.
Please
Explain. No, the
explain which
numbers.
company I
Explain for.
specifically compared Open Door to and their
No.
numbers that were relevant for
Eric.
Open Door.
Eric, for
You want to
those.
talk specific numbers?
Yeah,
Have an
Eric.
informed opinion about which specific company I compared Open Door.
Gentlemen, please, one at a time. Can we do that? We have an audience of 5,000 people.
Well,
Please, guys. Go ahead, George, then go ahead, Eric.
Eric has his chance to. Eric can.
Eric, are you
Eric can
Eric,
lay
are
out
you
the
muting
number.
everyone?
Eric can lay out the numbers right now for all of us. We'll all listen.
Okay, so Eric, you're entitled to say yes or no. Would you without any interruption from George, would you like to go ahead and lay out the investment thesis?
Sure. But it's obvious he's not familiar with my investment thesis.
Yeah,
But he's
so therefore we're going to give him the opportunity to hear it now, and he is going to remain muted throughout that time. So the floor is all yours.
Okay, on July 14th at 2 p.m., I sent out a multi threaded tweet which compared Opendoor to Carvana. Carvana almost died in December 2022. It was one of the only stocks I can think of that went from $400 to $3.50 back to $400. You can't use a Fidelity, Peter Lynch, backward looking price earnings multiple or even an EV to EBITDA multiple on a stock like Carvana. Carvana, which by the way is, transforming the way people buy and sell used cars by disrupting the traditional car dealership as the means to get your used car. Instead, going direct. They made money during the go-go days of last decade, but raised a lot of debt to do that. Were encouraged by Wall Street to do that. That's what drove them to a $400 stock price. But when interest rates rose, Carvana stock crashed to $3.50, mainly because lots of value oriented investors thought that they were going to go bankrupt because they wouldn't be able to cover the payments on their debt. Their forward price to sales multiple went from 6x in late 2020 to 0.5x forward revenues in June of 2022. However, they turned the corner. They were able to show that they were uh, EBITDA positive at first and then profitable later. And they were able to make money on their model, which many doubted at the time. I'm sure George would have said, if you had asked him in December of 2022, that they were going to go under, that they had no future, that all the backwards looking metrics that he likes to point to suggested they were going to go under. He probably also would have suggested that Apple should have put everything in boxes when Steve Jobs came back to take over from John Scully, too. But that's a separate issue. So then now obviously there were a bunch of changes that Carvana made along the way from 350 back to $400 to improve their business, refinancing debt and so forth. Today, back at almost 400, they have a 5 times forward price to sales multiple. I said that Open Door on July 14th, similarly, couldn't be valued on a price to earnings basis or EV to EBITDA basis. And so Carvana was the most useful comp. I never made a comparison to Uber, specifically in the financials, which George will never be able to produce. I have made lots of comparisons to the fact that Uber, Open Door could be the Uber of residential real estate, or pick another company, the Airbnb of residential real estate, the Carvana of residential real estate. But I've never spoken specifically about any metrics of Uber. But I'm sure they would be very similar. In any case, Open Door came public through a SPAC in 2021. Their highest price to sales forward multiple was 7x, around 39 bucks a share, I believe. It got as low as 0.1x forward revenues in, I guess it would have been on June 25th, when it hit an all-time low as a stock at 51 cents. And I suggested on my July 14th tweet that I thought that they would be able to prove that they were profitable. And by the way, George, in his rant said that they had never been profitable, blah, blah, blah. They just announced in early August, their first EBITDA positive quarter in 3 years. That does not prove sustainable long-term profitability, but it is a signal, especially with mortgage rates having dropped since then and with the anticipated Fed cuts coming this week and to follow, that has a direct positive impact on Open Door's business by increasing volumes and increasing profits. And I suggested on July 14th that they would be able to prove that they had a durable business as the Uber of residential real estate, cutting out the traditional agents and helping consumers afford more homes because they don't have to pay that extra 6% agent fee through this direct model, the same as Carvana, same as these other brands that I've mentioned. And I thought it was reasonable that in 2028, 3 years from now, they could get back to something like a 5 times forward price to sales multiple. You go onto Bloomberg today, you pull off what their expected 2029 revenue is, it is consensus $12 billion. That's how you get to $82 a share. Since that tweet, I've gotten to know this company a lot better. I've pushed for changes. I forced the old CEO to quit. I forced them to cancel their horrendous 10b5-1 insider dumping plans of RSUs onto retail. And I lobbied for Keith Raboy to come back on the board with Eric Wu, both co-founders. They are now, today is their first day, and they announced last Thursday that they'd hired Kaz, the COO of Shopify, to take over as CEO with a $1 a year compensation plan. However, he will get enormous shares, 82 million shares, if everything comes together, and is fully aligned with shareholders, of which George is not one. So yes, you can use a price to gross profit multiple if you prefer. You get to the same numbers. You cannot use EV to EBITDA or price to sales, or sorry, price to earnings.
Okay, George, would you like to respond?
Yeah, my number was not EV EBITDA. My 22 multiple is EV to sales. Sales properly calculated, not as gross sales, but of revenues of the company net. And so yes, 22 times EV to revenues. That's correct. And therefore, if you reverse engineer what earnings would have to be, go forward, not backward, how much they'd have to make, put in whatever margin you want, 1%, 3%, 5%, put in your own numbers. You can't get from here to there. And so, to talk about what Eric just said, 5 times, I think it was 28 or 29, 5 times revenues, 5 times 12, 60 billion to get to $82. Well, if you did 60 billion in gross, sorry, if you did 12 billion in sales, and you start, which would be, um, you know, recognize, okay, that would be more than doubling the company, fine. And then try to work backwards what the margin would have to be to justify the share price. You can't get from here to there. It just doesn't make any sense. The numbers don't mean so. I get people, good for
I
Eric,
just I
stock's
just
gone
told
up.
you the numbers and they make perfect sense, George. What are you talking about?
how if you make if you have 12 billion in gross sales, and then you try to figure out what are actually the revenues to Open Door if they do 12 billion of transactions, what the revenues to um, uh, Open Door would be. Put in 1%, 3%, 5%, whatever number you want. Okay, right now their gross margin is about 8%.
12 billion will be their revenues in 2029, according to Bloomberg consensus estimates.
Correct. And 12 billion refers to the gross sales of gross transaction sales. Like, for instance, when you look at Compass by comparison, Compass does
I said you can use gross profit if you want to use a multiple of gross profit. You get to the same numbers.
I don't understand that, Eric. How does that? No, so you're saying 12 billion of let's be clear. Let's define our terms. Compass does 230 billion of real estate transactions. I think but the revenues they show are, I don't know, like 8 billion or some number like that. Okay, so it's 230 billion and there's 8
I'm not a
billion. Okay,
Compass investor, George, and I doubt you are.
I'm not either, Eric, and that's irrelevant. What's relevant is trying to put together a model that makes sense. And so, are you saying so if if Open Door does 12 billion in property transactions, is that what you're saying? My guess would be that their revenues are going to be, I don't know, 2, 3, 500 million, some number like that. Or are you saying they're going to do 12 billion in actual services and commissions? In which case, the property transactions might be on the order of 2 or 300 billion. Which is it, Eric?
It's the same as Carvana's. They
No,
measure
no,
revenues the same as Carvana's.
Eric, are you able to answer the question without referencing
No,
Carvana?
you can't answer my questions, George. You're just
No, no,
coming up
no,
with
no,
this
no,
like
no,
fanciful,
no. First of all,
you're
no,
you're saying, well, I don't define revenues the same way that the Wall Street analysts define revenues in Bloomberg. So, Eric, I'm going to make up some definition and I'm going to say it's 22 times, even though you've never quoted a 22 times multiple, and blah, 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 George. I mean,
Eric, Eric,
this is silly.
Eric. No,
We're
what's
talking past
Eric,
each other. You're
Eric,
clearly not a tech investor. If
Eric,
people want to listen to you on Twitter, fine. I won't be one of them, but fine.
Eric, and you know what? And that's fine too. Obviously, you have your opinion. I have my opinion. You're not going to change my opinion. I'm not going to change your.
No,
Okay,
I
so
still want to know why you're why
can
are
you
you having the SEC investigate me
can
for what?
conduct yourself that interruption?
No, I can't, George.
Okay,
Not when.
Eric, I'd like to ask you a question. Um, to the point of Compass, um, what is the reason that Open Door should not be compared to Compass, or should it be?
I'm not a Compass expert.
I know, but you'd think that it's largely the same business, right? In terms of brokering. I mean, do you expect there to be a lot of balance sheet usage by Open Door to actually buy and hold homes?
Well, Opendoor is not a broker. They're disrupting the brokers. They're disrupting
I
Compass.
I understand. I'm sorry. I use the word broker colloquially, not technically. But in terms of the way you look at the business, if someone wanted to go ahead and I understand your interest in comping Open Door against another technology disruptive company, but the question and
Here's the issue. Like,
go
Carvana
ahead.
doesn't make much money, much of its gross profit or EBITDA margin from buying and selling cars. Just like Open Door's never going to make that much money. They will make money from iBuying. That's what they do. iBuying. Okay, they buy houses, they hold them, they hopefully for as short a period of time as possible, and then they sell them. They use
Right.
the machine learning and
You-
AI algorithms to hopefully price those homes that they pay for and that they sell for properly, so that they don't get themselves pear shaped like they did in 2021.
Where are
But
they
the
going to make
but
most of their
but
money from?
but the way that Carvana makes most of its profit from is from finance and interest on those cars. The way that Open Door will make most of its money from going forward, not backwards, is from mortgage and title. There's a
Got it.
reason why two of the NBA teams are owned by guys that run mortgage companies.
I got it. it's a total. I 100%. It's a different business model. It's not relatable to Compass.
The
It is
goal
more. Go ahead.
the goal with Open Door, as it was with Tesla, as it is with Carvana, is 10% global market share. If they can get 10% global market share, and first they're going to have to dominate in the U.S., which will probably take 3 or 4 years. Then they will have to go international, as Uber did. And obviously, the international market is multiples of the US market, which is already a huge market to go after and to be the leader of. Their goal will be 10% transactions. They'll make some, probably low single digit, gross profits from the iBuying, but the big money will come from mortgage and title.
And
As happens with all these other technology businesses, when they build the national platform, they bundle in other revenues. There were so many people that said, Uber, even as late as 2021, 2022, Uber will never make money from ride sharing. Uber will never make money from food delivery. Guess what? They do right now. I'm sure George didn't think so. I'm sure George was, if he even knew what Carvana was thinking that they were going to go under when they were $3.50.
You know,
Why should we listen to someone who has been so wrong about the most relevant companies that relate to Open Door?
it's really interesting. Um, the logical fallacies
I
that.
should have the SEC
Go
investigate
ahead,
you for
go
logical
ahead,
fallacy, George.
Eric. Again, you can't. I've been quiet the last 10 minutes. You can't stay quiet for 30 seconds.
You've been muted by David for the last
No, I
few
haven't.
minutes.
No, I've been on for quite a while. All right. You have you're offering examples of a company in another industry, which is really not that relevant. If you instead look at offer some numbers, I mean things like mortgage and title. That's a
You know
commodity,
what we should do?
Eric.
David should have a poll at the end of this
No,
spaces.
no, we
And
don't.
who do the 5,000 people believe? Me or George?
But you know
Or
what,
you can look at the stock price of Open Door
Eric,
today.
Eric. At the end of the day, it doesn't matter what I think. It doesn't matter what you think.